Hi everyone. Welcome to today's live analysis session brought to you by IC Markets. I trust all of you have had a great weekend, and let's get the brand new trading week underway. Right, before we start, please take note of the disclaimer. Right, this is marketing communication. It does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for the transactions in financial instruments. Also, take note of the risk warning that comes with trading forex and CFDs as they carry a high level of risk to your capital, and you should only trade with money you can afford to lose. Right, my name is Ketan Rameshchandra. So this webinar series is brought to you in a special partnership between IC Markets and Everest Fortune Group, where we have been the finalists for Best FX and Equity Research for the following years, 2019, 2020, and 2021. Right, before we dive into the charts and trading view, we'll take a look at the economic calendar for this week. Right, there's quite a few things going on. I want to bring your attention to the Bank of Canada's monetary policy statement, announcement, and the press conference that's going to take place on Wednesday, 23rd of October. And then we've got flash PMI data for the Euro area as well as for the US coming out on Thursday, the 24th of October. And of course, should you have any requests for any other instruments, please do drop them in the chat box early, right? So we have time to go through the analysis together, right? Hi Bob, great to see you as well. Welcome back, right? So once again, guys, if you have any analysis for any of the major currency pairs, the indices, commodities, right? Do drop them in the chat box well in advance, so we have time to go through the respective analysis together, right? We don't have to rush through anything. All right, so let's take a quick look at the economic calendar for this week, right? There's not much going on today, right? Apart from China cutting its 1 and 5 year loan prime rates, right? They made a much larger than expected reduction than originally anticipated, which has supported or lifted the Asian indices earlier this morning as well, primarily benefiting the CSI and the Shenzhen component as well. Right. Then of course we've got a few central bank officials speaking tomorrow. We've got Bank of England Governor Andrew Bailey, Fed President from Philadelphia, President Harker, and as well as ECB President Christine Lagarde all speaking tomorrow. And on Wednesday at 1:45 p.m. GMT, the Bank of Canada is going to widely expected to reduce its overnight rate by 50 basis points to bring it down to 3.75%, while the press conference will commence at 2:30 p.m. GMT. Right, and then on Thursday, we have a barrage of flash PMI data out of the Euro area. So we have flash PMI data for France, Germany, the Euro area as well, the wider Euro area itself, and of course from the United Kingdom, and finally from the US. And then on Friday, we have retail sales out of Canada. Right, hi Shal, good to see you as well. Good morning. Right, so taking a slightly closer look at the Bank of Canada's upcoming monetary policy announcement. Right, you can see here they have already made 3 consecutive rate cuts of 25 basis points over the last over the last 3 meetings, of course. Right, so they've brought it down from about 5.5% to currently where it stands is about 4.25%. Right, yes, yeah. So sorry, they brought it down from 5%. Yep, they brought it down from 5% down to 4.25%. Right, as there are concerns, right? At the previous meeting, there were concerns among policymakers that they may undershoot inflation, adding to their worries of over tightening, right? So hence they have progressed with 3 consecutive rate cuts of 25 basis points. And if you look at the forecast for this week, this fourth meeting is going to see a much larger rate cut of 50 basis points. So what was previously 3 consecutive 25 basis points cut looks to be now a pretty jumbo cut of 50 basis points at the upcoming meeting. Now, why is this the case, right? Part of the reason is we can see labor market has continued to slow in Canada in recent months, while at the same time we can see inflation has moderated significantly lower for both headline CPI, which is the chart on the left, and core CPI, which is the chart on the right. We can see headline CPI has fallen down to 1.6% year over year in September, right? While the core CPI, edged up a little bit higher to 1.6%, right? But despite over that, we can see that both inflation metrics are well below the BOC's annual target of 2%, right? You can see the BOC has an annual inflation target of 2%, and with inflation looking to be remaining persistently below this level, right? They're moving, it looks like they're going to move ahead with a 50 basis point cut on Wednesday. right? And part of another reason, the third reason as well, right? We remember the first reason was a slowing labor market. Second reason is inflation cooling, right? Cooler inflation. And of course, the third one is economic output. Economic activity, right, as seen in annual GDP growth rate over the last 4 quarters has been relatively muted, a far cry from the average of 4% that we saw in 2021 and 2022. So economic output has significantly deteriorated, right? So this large rate cut as well is a bit to kickstart its economy as well, right? So take note, if you do see this 50 basis point rate cut takes place, while we see a statement and a press conference that conveys further dovish rhetoric with regards to future monetary policy action, we can definitely expect the loonie to come under significant selling pressures, right? So the loonie, right, which is the Canadian dollar, is expected to sell off sharply. Then we can expect the currency pair, the dollar CAD, to continue to remain lifted and climb higher as the week progresses. All right, now let's dive into the charts and trading view and begin our analysis with the dollar index. And right, all right, Charles, yes, Charles has a request for dollar yen, uh, euro pound, and okay, we can do euro pound. I've got that here as well. Euro pound is here, and Aussie euro as well. All right, great. Okay, so let's just start with the dollar index. We'll cover dollar CAD as well since we've got the Bank of Canada's monetary policy statement coming up on Wednesday, and then we'll take a look at dollar yen, pound euro, or in my case it'll be euro pound, and then we'll take a look at Aussie euro as well. All right, okay. So looking at dollar index, last Friday we saw the dollar index sell off quite sharply, right? This was primarily due to China releasing a round of stimulus measures last Friday, which saw commodity currency pairs or the commodity-backed currencies such as the Australian dollar, New Zealand dollar, and the Canadian dollar gain significantly versus uh, the US dollar. So we saw the US dollar sell off quite sharply last Friday, but today, as markets reopened, the dollar index at around has stabilized at around 103.46 and looks to have climbed higher as well. Right, so we can see here since the beginning of October, dollar index has been in a strong uptrend, right, driven by a combination of strong fundamental data as well, right. We had ADP employment report on Wednesday, 2nd of October, and then we had, of course, non-farm payrolls on Friday, 4th of October, both of which showed a rebound in job creation, right, triggering higher demand for the US dollar. Then the following week, we had CPI data that was released on 10th of October and PPI data on Friday the 11th, right, both of which showed the core readings accelerate slightly as well. So with core inflation for both consumer and the producer sectors accelerating slightly, while we've seen labor market data improve with job creation rebounding while the unemployment rate falling. That has provided, I would say, four elements of bullish catalyst for the dollar index, right? Hence, we've seen demand for the US dollar pick up very significantly over the last three weeks, pushing dollar index almost as high as 104, right? So we had like four major bullish fundamental catalysts driving the dollar higher, and it looks to have taken a breather last week. So we've identified the pivot level at 103.27. We can see that previously this level here functioned as a pretty good resistance barrier in the first and second week of August, right? As the dollar index fell sharply in the first week of August, it retraced higher, but it pretty much failed to break above 103.35 until the 16th of August here, right? So this level here previously functioned as a pretty decent pullback resistance level, and now it can potentially function as a pullback support, so which is where we've identified the pivot here. So if you do see the dollar index drop back towards this pivot level here, it could stabilize and reverse to resume the uptrend. But for now, it seems to have stabilized at around 103.46, slightly above the pivot level here. Now, looking slightly below, there's a nice overlap level at 102.55. This is where a major overlap sits, right? This is the overlap support where we have seen the dollar index run into resistance here in excuse me, in the first half of January, then making a nice swing low support here in mid-March, and then finding support here briefly on 14th of August and also on the 5th of August, after which it proceeded to function as a little resistance as well on Monday, 7th and 8th of October before finally breaking higher. So this creates a nice overlap level, which is being identified as the first support. First support is an overlap, support that is accompanied by Fibonacci retracement at 38.2%. Right, so what this also means is, right, if you're long on a dollar index, right, when I look across this level here at 103.92, this is a pullback resistance level that's accompanied by a Fibonacci retracement at 61.8%. So this, for now, I've labeled this level as an upside confirmation, but this level here can also be used as a potential take profit target or price target for any long dollar index positions that you may have, right, with dollar index in a nice uptrend. And with today's candle in green as well, if we do see further upside for this index, right, you can identify the first take profit target at this pullback resistance level at 103.92, which is accompanied by a Fibonacci retracement at 61.8%. Now, why have I labeled this as upside confirmation, right? If demand for the dollar continues to increase over the next couple of days, or especially this week, right, this level may be taken out as well. So that means we may see further bullish continuation for the dollar index. And if that were to happen, we can then target the next potential take profit target at this overlap resistance at 104.68. So 104.68 is an overlap resistance level that's accompanied by a 78.6% Fibonacci projection, Fibonacci retracement as well. Right, so for now, right, the immediate support level is this pivot, which is a pullback support at 103.27, and then pullback resistance at 103.92, which is accompanied by a Fibonacci retracement at 61.8%. Right, so with dollar continuing to remain elevated, right, demand for the dollar remains elevated, keeping dollar index supported as well. Remember, so once again, upside confirmation level can be used as a potential take profit target for any long dollar index trades. And of course, if this index continues to climb even higher, making a bullish break above this pullback resistance at 103.92, we can then target the next resistance level, which is an overlap resistance at 104.68. All right, so take note, these are the key levels for the dollar index here on the daily time frame. Let's then move on down to dollar CAD. Right, since we've have a monetary policy announcement by the Bank of Canada on Wednesday, right? Let's identify the key levels for this currency pair, right? Although the announcement takes place on Wednesday, perhaps some of these levels may still be valid by then. But of course, if they are not, then please, readjust the levels if once you've done your analysis. But for now, we see the dollar CAD rising very strongly or very sharply since the beginning of October, right? And it has made a swing high resistance on Tuesday, 15th of October at 1.3838, which has been identified as the pivot. So this pivot here is actually a swing high resistance. And if you've been long dollar index since last Thursday and Friday, right, or perhaps even from this morning, right, identifying your first take profit target at around the pivot level at 1.3838 is a suitable level to do so. And of course, if we do see the Bank of Canada, right, make that rate cut, interest rate cut action, right, they move ahead with their interest rate cut, that could drive the dollar CAD even higher, right? Remember, when the Bank of Canada cuts its interest rates, the Canadian dollar or the loonie is going to come under significant selling pressures, and that's going to cause or provide a strong tailwind for the dollar CAD. So we could see the dollar CAD continue to climb higher over the next couple of days, and especially if we do see a dovish statement and a dovish press conference by Governor Tiff Malcolm, right? That could certainly or they could potentially provide further tailwinds for this currency pair, and then we could see it break above the pivot and perhaps rise as high as the first resistance at 1.3879. The first resistance here is a swing high resistance that has occurred at the beginning of August, right? So once again, dollar CAD is looking very strong to the upside, right? And especially with the rate cut announcement coming up on Wednesday, we can expect this currency pair to continue to remain elevated, pushing higher. So your first take profit target can be identified at 1.3838. This is a swing high resistance that has occurred last Tuesday. And of course, should the dollar CAD continue to rise even higher, we can then target the next take profit target close to the first resistance, which is a swing high resistance that has occurred on 2nd of August. Now, in terms of support, we can see here as the dollar CAD pulled back quite sharply on Tuesday and Wednesday, it stabilized at around 1.3750 before resuming the uptrend. So this is a pretty decent pullback support level here. That's also accompanied by Fibonacci retracement at 23.6%. Right, so these are the key levels for the dollar CAD, and we can expect this currency pair to definitely push higher over the next couple of days. Right, so that's it. Remember, pivot levels and resistance. Then the first resistance can be used as potential price targets for any long dollar CAD trades that you may have. All right, okay. Now let's move on down to dollar yen, right? All right, shall we now move on to dollar yen, euro pound, and Aussie euro as well. Let me see, what do I have it as? Do I have it as, or yeah, I believe I should have it as, oops, with Aussie euro here. Okay, doesn't matter. We'll search for it after that. Okay, so dollar yen first, right? Okay, yeah, let's take a look at dollar yen. Right, we can see as well, right? Dollar yen moving in a nice uptrend as well since mid-September, right? After falling as low as 139.50 in mid-September, it has sort of stabilized at around 142 and rebounded quite strongly as well. And as of 4th of October onwards, it's also trading within a nice bullish channel, right? A pretty nice gentle bullish channel here. It's not the sharpest bullish channel, but you can see it has tested the upper trend line a couple of times and the lower trend line a couple of times as well. And today it has found support at the intersection, roughly at the intersection of the bullish channel and the pivot. The pivot is a pullback support level, or in fact, it's actually like an overlap level here. Now, why do I say that? Previously, this level at 149.27 served as a swing high resistance in mid-August. And you can see here it served as resistance again on 10th of October, after which breaking out, it served as pretty decent support on 15th and 16th of October and has functioned as support once more on the 21st, which is today. So this creates a nice overlap level, which has been identified as the pivot. So the pivot is an overlap support at 149.27, and it looks like the intersection of the bullish channel and the pivot has functioned as a pretty decent support area, causing dollar yen to bounce higher as well. Right now, the next support level underneath the pivot is another pullback level at 146.85. Once again, this level previously functioned as a swing high resistance at the beginning of September, after which now it can potentially function as a nice pullback support level here. Right, I believe we can also probably run the Fibonacci retracement. Right, we can probably run the Fibonacci retracement from this low here on 30th of September going up to the high of 17th October. Let's pull up all the fibs. We can see that the 38.2% retracement aligns very well with the first support. Okay, and let's see. Now in terms of resistances, right, we can probably run a Fibonacci retracement as well from this high on 3rd of July, going down to this swing low on the 16th. Let's pull up all the fibs. Right, we can see that the dollar yen has sort of been capped under the 15% retracement as well. It's been restricted under the 50% retracement. And when I look across this level, this looks like to be a pretty decent resistance level as well. We can also identify this as an upside confirmation level, right? So, and we can keep 50 and 61.8% retracements. Right, now let's zoom in a little bit so we can see here dollar yen, the first immediate resistance barrier for the dollar yen is going to come in at this overlap level, right? This is an overlap resistance at 150.88, right? Previously it was serving as resistance here and in end of Feb, early March, after which it proceeded to function as support in end March, early April. So then this creates an overlap level, which is accompanied by Fibonacci retracement at 50%. So this is actually an overlap resistance. I've identified it as the upside confirmation. Now this upside confirmation can serves two purposes. Firstly, it can be used as your first take profit target for any dollar yen positions, long dollar yen positions that you may have, right? Especially with a nice bounce off the pivot level here today, right? We can identify a suitable take profit target for long dollar yen at 150.88. This is where your first take profit target can be identified. And of course, if the dollar yen continues to climb higher, this level here would then serve as upside confirmation. That means we're looking for potential bullish breakout for this currency pair. And if that were to occur, we can then target the next take profit level at around the first resistance, which is at 152.90, right? This is the next take profit target that we can identify should we see dollar yen continuing to climb higher, right? First target is the upside confirmation level at 150.88, and the second potential take profit target is at 152.92, which is the first resistance, and both are accompanied by 50% and 61% retracement levels respectively. Right, so these are the key levels for dollar yen. And of course, with dollar index remaining supported today, right? Dollar index rising higher. Dollar yen, of course, is quite likely going to follow suit as well. Remember, the dollar index is a basket uh, uh, of currencies that are matched or that are weighted against the US dollar, right? So the basket consists of almost 50 or 55% made up of the euro and another 15% of the Japanese yen, right? So if the dollar index is rising strongly, we can expect the currency pairs such as dollar yen to be rising strongly as well, and we can expect the euro to be falling, right? So take note of how what is the composition of the dollar index and how its direction has a major impact on the other currencies, particularly for the euro and the Japanese yen. All right, so take note, this is the key levels for dollar yen here for today. Now let's take a look at euro pound. All right, let's take a look at euro pound. Right. Oh, sorry, that's pound yen. Let's switch on over to euro pound. Right, you can see here, euro pound has dropped as low as 82.94 last Friday, right? Highlighting the weakness in the euro, right? When this currency pair is falling sharply like this, it of course is going to be reflecting the strength of the British pound versus the euro, and that's been in play since 8th of August, right? We see a series of lower highs, lower lows, and we can probably identify a nice descending trend line as well, right? Pretty good descending trend line here. And this intersection of the descending trend line and the pivot level is the first resistance for the euro pound here. So this is a overlap level here. There's a pretty decent overlap level at 83.66, which is also accompanied by a 50% Fibonacci retracement. Now we can continue. We can also see that this currency pair continues to trade underneath the red Ichimoku cloud, which highlights the ongoing bearish momentum. So any retracement to the upside for euro pound, right, should it rise up to this pivot level here, is quite likely going to stall and reverse to drop lower, right? So the intersection of the descending trend line, the overlap resistance, which is the pivot, and a 50% Fibonacci retracement all highlight a potential resistance barrier. So should we see the euro pound rise up to this level once more, it could potentially stall and reverse to drop lower. So we have a potential bearish reversal setup for the euro pound should it reach the pivot level here. Now, at the same time, right, if you've also gone long on the euro pound, especially after yesterday's nice rebound, right, nice rebound on last Friday, right? Targeting your take profit target close to the pivot or slightly underneath the 50% Fibonacci retracement is a suitable area to do so as well. So take note for those who may have gone long on the euro pound as of last Friday or perhaps even from this morning, right? Identifying your take profit target for your long position just underneath the 50% retracement level would be a suitable area to do so. And conversely, right, it also presents itself as a potential bearish reversal opportunity for the euro pound. And should that bearish reversal take place close to the pivot, we are then going to target the first support at 83.12 as a potential take profit level for any short euro pound trades, right? And higher up, there's a resistance, there's a nice overlap resistance at 84.09, which is also accompanied by Fibonacci retracement at 38.2%. Right, so take note, these are the key levels for euro pound, and the downward momentum is strongly in place, right? This currency pair continues to trade underneath the red Ichimoku cloud, which highlights the ongoing bearish momentum, and at the same time, it continues to trade underneath a descending trend line as well, right? So we have the intersection of the descending trend line, the pivot, and the 50% retracement level to identify a potential resistance barrier, which can be used as a potential take profit target for any long trades that you may have, trying to capitalize on this rebound. And conversely, we can also use this resistance barrier to identify a potential bearish reversal opportunity, right? And if that bearish reversal takes place, we can then use the first support at 83.12 as a potential take profit target. All right, now we're going to look at Aussie Euro, right? Let's take a look at Aussie Euro. Oops. Why isn't it here? Aussie Euro. That's odd. Okay, let me try the other way around. Euro Aussie. There we go. All right, so Euro Aussie is here, right? So in this case here, of course, when this currency pair is rising, it means of course there's higher demand for the euro versus the Australian dollar. But what we saw from the second week of September till the first week of October, a very strong bearish move down here, right, for the euro Aussie, which has finally reversed, and it looks to have stabilized at around 1.62 here. So we can see this is a very nice bearish downtrend that we can run a Fibonacci retracement, and we can see when I look across the level where the 50% retracement lies, I see a nice overlap level here, right? This level would serve as an overlap resistance, and we can identify it as the pivot here. So with the euro Aussie rising today as we speak, right, this pivot level here, which is an overlap resistance that's accompanied by a 50% Fibonacci retracement, can be used as a potential take profit target for any long trades that you may have. Conversely, with this currency pair being rejected at of this level several times, it also presents itself as a potential bearish reversal opportunity, right? And slightly higher up in terms of the first major resistance here. Let me see, let's pull up the 78.6 as well. Right over here, maybe there's a nice little, trying to figure out where the next major is. Actually, the market structure here is not really that great because we see a big cut taking place here. Probably maybe the next resistance beyond the pivot can be identified close to the 78.6% retracement level. So let's keep 50 and 78.6. And we can see here that this level at 1.6458 previously functioned as pretty decent support from 19th of August till the 26th of August, and then it proceeded to function as support once more on the 12th and 13th of September. So this was a pretty decent support level here at 1.6458, which can now be used as a potential resistance barrier that's accompanied by a 78.6% Fibonacci retracement, right? But we can still see that this currency pair continues to trade in a downtrend as well, right, and continues to trade underneath the red Ichimoku cloud, highlighting the ongoing bearish momentum, right? And you can see that there's a pretty decent descending trend line as well that begins from 9th of September. So we have the intersection of the descending trend line, the pivot, which is an overlap resistance, as well as a 50% Fibonacci retracement, all highlighting a potential resistance barrier. So that is why this resistance barrier can firstly be used as a potential take profit target for any long Euro Aussie positions that you may have, right? With the Euro Aussie rising quite strongly today, this pivot level can then be used as a potential take profit target for any long trades. Conversely, if this currency pair does stall around this level once more, right, it presents itself as a potential bearish reversal opportunity. And should that bearish reversal take place, we can then target the first support at 1.6041 as a potential take profit target. And of course, what I see here is a pretty decent intermediate support level as well at 1.6149. So this can also present itself as a first take profit target for any short trade. So should we see Euro Aussie rise up towards the pivot, stall around this level, right, that presents itself as a potential bearish reversal opportunity. And should that bearish reversal play out, we can then target the intermediate support at 1.6149 as the first potential take profit target. And of course, should this currency pair continue to slide even lower, we can then target the next take profit level at around the first support at 1.6041, which is a swing low level here, right? So these are the key levels for Euro Aussie on the daily time frame as of today. Right. Okay. So, all right, Shal, I think we've covered all your requests as well. Dollar yen, euro pound, and euro Aussie as well. All right. So with that, now let's move on over to the commodities. Let's look at gold, crude oil, and then we'll wrap things up with the indices and perhaps with crypto as well. All right. Okay. All right. Taking a look at XAU USD. Of course, this is the instrument that tracks spot gold futures, and we can see uh, this precious metal has been trading in a strong bullish uptrend, right? It has broken out above a previous intraday all-time high. The previous intraday all-time high for spot gold was at $2,685, and that was cleanly broken last Thursday, and the bullish momentum has continued and flowed over to today as well, right? You can see here, uh, we have used a combination of Fibonacci projections and extensions to help us identify potential resistance barriers. Remember, when price breaks above a previous resistance or is trading close to its new all-time high, we have to rely on Fibonacci extensions and projections as potential resistance barriers as well. So, and also this pivot level here is a resistance barrier that's identified by Fibonacci confluence that consists of the 61.8% projection and 161.8% extension. Now, this pivot level here can be used as a potential take profit target, right? So if you've been long on XAU USD since last Thursday, or even perhaps from this morning, right, you can identify a potential take profit target, or you can identify the first potential take profit target at around this pivot, which is at $2,735. Now, of course, if gold prices continue to drive even higher, right, we are then going to use the 78.6% projection, which is at around $2,772 per ounce. We'll be using this level as the next potential take profit target. So take note how we can use these Fibonacci extensions and projection levels to help us identify potential resistance barriers, which in turn can be used in the identification of potential take profit targets as we see this precious metal uh, rise very strongly since mid-October, right? After pulling back quite sharply at the end of September and early October, spot prices stabilized at around $2,608 and has rebounded very sharply since then. Right, so take note, these are the key support levels and resistance levels as well. The previous all-time high that occurred on 26 September can now serve as a pullback support at 2,672, which has been identified as the first support. And we can also see there's a nice ascending trend line that's been in place since 5th of August. And of course, this precious metal continues to trade above the green Ichimoku cloud, which highlights the current ongoing bullish momentum, right? So these are the key levels for gold, right? With the pivot and first resistances, uh, which can be used as potential price targets for any long trades that you may have. All right, take note here. And of course, the intersection of the ascending trend line and the first support at $2,672 is going to likely function as a strong support area. So should we see any strong pullbacks take place, right? Example, like as what we saw from the end of September to early October, right? A strong pullback like this. Should another similar pullback take place, maybe it could quite likely once again find support at the intersection of the ascending trend line and the first support, and this may give us a good opportunity to go long on XAU USD once more. Right, so take note, these are the key levels for this precious metal here on the daily time frame. Now let's move on over to XTI USD. XTI USD is an instrument that tracks WTI crude oil futures. All right, hi Costas. Yep, definitely we can have a look at dollar franc as well, right? Let's jump into dollar franc once we've covered crude oil. All right, great to see the request come in as well. All right, okay, so crude oil has been extremely volatile, as you can see, right? After falling sharply from 5th July, dropping down as low as $65.45 per barrel on 10th of September. Right, this is a very sharp pullback, right? It losing almost 23% in a period of about 2 months, right? Yeah, so about two and a half months, we have seen crude prices drop 23%, and after that, it has staged a very strong rally as well, right? From 10th of September till this high on 8th of October, practically reversing all the losses to gain another 20%. We can see very significant wild swings in crude prices, highlighting the ongoing volatilities, right? So volatility is elevated for this commodity, so take note, right? We can expect abrupt bearish reversals and sharp bullish reversals as well. So take note of that. Don't get caught out unnecessarily. We can see this commodity has been making wild swings as far back as 5th of April, right? Right, the wild swings in crude prices are driven by a combination of factors as well, right? We've seen global demand for crude oil tapering lower, right? The recent OPEC reports have also forecasted a lower demand moving forward. We've also seen geopolitical tensions in the Middle East and in Russia, Ukraine keep prices elevated as well. And we've also seen crude prices being supported by announcements of economic stimulus measures out of China as well, right? So we've seen China releasing a barrage of stimulus measures aimed at kickstarting its economy, which has also provided strong lift in certain instances for crude prices and for commodity related currencies such as the Aussie, Kiwi, and Canadian dollar as well. But you can see here, as of now, the counter trend rallies, although they are large, this in this commodity continues to trade in a strong bearish downtrend as well, especially here since 8th of October. So over the last 3 weeks, it continues to remain in a downtrend, and we can highlight a pretty decent descending trend line as well. So for now, right, we have seen crude prices stabilize just above the pivot. The pivot at $68.24 was identified as a swing low support, right? I was expecting crude prices to drop a little bit lower today as markets open, but it seems to have stabilized just above the pivot level here and looks to be rising higher. And take note of this descending trend line. If we do see this descending trend line uh, fail to hold prices, we can expect XTI USD to rise up towards its first resistance at $72.43. This is an overlap resistance level that's accompanied by 50% Fibonacci retracement. Right, so with crude prices looking pretty strong today, we may see a minor rebound for this commodity. So if you've gone long on XTI USD as of this morning, perhaps, right, take note of this descending trend line. A clean break above this descending trend line could cause this commodity to rise up towards the first resistance, which is where you can identify your potential take profit target at around $72.40 per barrel. And slightly lower, right, the first support is $66.66. It's a nice swing low support that has taken place on 10th of September. All right, there's a request by Costas as well. So let's take a look at dollar franc. Since 30th of September, the franc has weakened as demand for the dollar picked up, right? But since 2nd of July till 25th of September, right, you can see that the Swiss franc has appreciated significantly versus the US dollar, causing this currency pair to drop as low as 0.84. But since then, it has rebounded quite nicely, right? And I can also spot a pretty decent ascending trend line as well. There's a nice ascending trend line that also can be identified for this currency pair here. Right. So the pivot level at 86.07 is identified as an overlap support that's accompanied by Fibonacci retracement 23.6%. Right. So we have the combination of this ascending trend line and the pivot level and 23.6% highlighting a potential support area. Right. So we could see this currency pair continue to climb higher as well. Right. What would signify a major shift in momentum or shift in direction would be for dollar franc to break through the ascending trend line and the pivot level, and of course the 23.6%. If that were to happen, then of course we can probably expect dollar franc to pull back even further. But for now, this currency pair looks to be grinding higher, and it looks like it does want to continue to move higher, and we can then identify a potential take profit target close to 0.87 here, right? 0.87 is a level that's quite close to where a swing high resistance has taken place on 15th of August, right? So between 0.87 and 0.8725 is a strong resistance barrier for dollar franc, right? So take note, right? You can identify a nice a potential take profit target in this zone. And of course, should we see dollar franc pull back close towards the pivot, and if it manages to stabilize around this level once more, right, it gives us a better opportunity to go long on this currency pair. But also, if this pivot level gives way, then take note that we can probably expect a strong shift in direction and momentum, and we probably can expect dollar franc to pull back a bit more. All right, so these are the key levels for dollar franc on the daily time frame here. First resistance is a swing high resistance that's occurred on 15th of August. Pivot level at 86.07 is an overlap support that's accompanied by Fibonacci retracement at 23.6%. And the first support at 85.16 is also a pullback support level that's accompanied by 50% retracement. Right, so bias for dollar franc is to the upside, right? And then take note, should it continue to grind higher, we can then target 87.87 as the next potential take profit target, between 0.87 and 0.8725. All right, okay, so we've covered a few of the currency pairs, commodities. Let's take a look at indices. Let's take a look at DE40, and then we'll look at US 500. Right, we can see here for DE40, right, this is the instrument that tracks the DAX futures. We can see it has run into resistance today at about where the intraday all-time high was formed on Thursday, 17th of October. So 19,681 is the intraday high that was formed on 17th of October, and this is where the DAX has stalled today and dropped quite sharply. Right, this level here is also a resistance barrier that's identified by a Fibonacci extension at 127% and a Fibonacci projection at 61.8%. Right, so we can see this pivot level here at 19,715 is a strong resistance barrier that's identified by Fibonacci confluence as well as by the intraday all-time high. The next resistance barrier beyond the pivot is identified by another or a second Fibonacci confluence. In this case, it's the 78.6% projection and the 161.8% extension. This is where the first resistance at 19,932 is identified. And in terms of support, 19,399 is an overlap support. We can see this level previously functioning as resistance at the end of September and then functioning as support in mid-October. So this creates a nice overlap level. And of course, we also see a nice ascending trend line for DE40 that's been in place since the beginning of August. So we have this area here, the intersection of the ascending trend line, and the first support helps us identify a strong support level for DE40. So if we do see this instrument stabilize around this zone and manages to stabilize above this zone, it helps us identify a potential entry to go long on DE40 as well. But take note, any clean break through the ascending trend line and the first support is quite likely to trigger a shift in momentum, and then we can potentially expect further downside action for this instrument. But for now, this pullback here looks to be extending down towards the intersection of the ascending trend line and the first support. And if we can hold around here, it then gives us a good opportunity to go long on the DE40 once more, on the DAX once more, and then we can target the area close to the intraday all-time high as a potential take profit target. Right, so these are the key levels for DE40, which tracks the DAX futures here. Now let's move on over to US 500. Right, similar market structure for the US 500 as well. We see a nice ascending trend line. We also see US 500 retreating away from its latest intraday all-time high that was formed on 17th of October, right? So it hit a level of 5,882, and today is where it sort of got rejected of this level once more, but it's falling down towards a pretty decent pullback support level at 5,814. This is a pullback support level that took place on 15th and 16th of October. We can see US 500 stabilizing around this level last week before rebounding quite strongly. This support level is also accompanied by Fibonacci retracement at 38.2%. Right, so we have a combination of the ascending trend line, the pullback support, which is the first support at 5,814, and the 38.2% Fibonacci retracement, highlighting a pretty strong support zone. So should we see US 500 stabilize around this support zone, it gives us a good opportunity to go long on the US 500. Again, it helps us identify a pretty decent buy opportunity or entry point for this instrument, and then should that bullish reversal take place, we can then target the intraday high as the first potential take profit target. And of course, if US 500 continues to climb even higher, we can then identify the next take profit target at the 61.8% Fibonacci projection, right? That's where the pivot has been identified, and we have used the 78.6% projection to identify the next resistance beyond. Right, so you can see a very strong bullish moves or bullish uptrend for US 500, but of course, needless to not of course, no instrument moves up in a straight line. So we've also seen very strong retracements or pullbacks as well. Right, we've seen that occur in mid-July, in the beginning of September. We saw some consolidation here at the end of September, early October, before finally breaking higher as well. Right, you can see a very nice sort of consolidation period here. Right, pretty decent consolidation period here before US 500 broke higher. Right, we're in the midst of US earnings seasons as well, right? So we have the various public companies releasing the earnings report, from the big banks to tech and so on and so forth. So pretty decent earnings have also propelled markets higher, right? The banks or the financial sector have posted pretty good returns or pretty good earnings reports on as a whole, and that has lifted this index higher as well. And we've got big tech coming up this week and I think next week as well. So should we see strong earnings results from these companies, then we can probably expect this uptrend to continue to move even higher. All right, so take note, these are the key levels for US 500 on the daily time frame. And this support level here, identified by the 38.2% retracement, the ascending trend line, and the pullback at 5,814 may offer a pretty decent opportunity or buy entry opportunity for this instrument. All right, so let's see. Okay, before we continue, I'm going to launch a poll as well. Really appreciate it if you guys can give your feedback with regards to today's webinar, and then we'll start. We've taken a look at most of the asset classes. We can take a look at crypto after this as well. Take a look at crypto with Bitcoin and Ethereum. Okay, just give me a second. Okay. All right. So I've just launched the poll as well, right? Really appreciate it if you guys can give your feedback with regards to today's webinar. And let's now move on over to Bitcoin. Take a look at crypto and Ethereum as well. Right. We can see here Bitcoin trading at around 68,390, right? It is trading close to a previous multi-swing high resistance, right? We see a nice multi-swing high resistance taking place on 22nd of July and then again on 29th of July, right? Nice multi-swing high resistance that's been in place. And this is where it then over the weekend, right? Over the weekend, Bitcoin made a nice bullish break above this multi-swing high resistance, and now it looks to be finding support here as well. So the pivot level is actually a pullback support level at 68,495. Remember, when price breaks above a prior resistance barrier, as what has happened over the weekend on Sunday, this prior resistance can then potentially function as a pullback support, which is what Bitcoin looks to be doing as we speak. We can see it dropped as low. Hang on. You can see it dropped as low as $68,098 today, but it looks to be consolidating or stabilizing around the pivot. So perhaps we can see this this coin, this crypto climb higher as well. And I think we can even identify a pretty decent ascending trend line as well, right? Maybe not the best ascending trend line, but you can see here a couple of touches here on 13th and 14th of October. And a touch here as well over the weekend and early this morning. So we have the combination of this ascending trend line and the pivot level, which is a pullback support to identify a potential support area. And if Bitcoin can hold above 68,000, then we have further conviction that this uptrend is likely to continue. However, clean break out of below 68,000 is definitely going to trigger a pretty strong pullback all the way down towards the first support. First support is another pullback support level at 68,851. Okay, don't need any of these retracement levels now. That's fine. Right, there's another pullback support level at 65,851. So previously, Bitcoin broke out of a swing high resistance that occurred on 28th of September. The clean break occurred on Tuesday, 15th of October. So what was previously a swing high resistance can now potentially function as a pullback support, similar to how the pivot has been identified. And of course, the first resistance at 71,400 is a multi-swing high resistance that has taken place here on in May, sorry, right, and on 21st of May, and then on 6th of June, right, a nice multi-swing high resistance here. Right, so take note, these are the key levels for Bitcoin. Let's take a quick look at Ethereum. Right, and thanks everyone for those of you who have voted in the poll as well. Truly appreciate it. And let's just continue the analysis with Ethereum. Right, so similar market structure to Bitcoin as well. Ethereum has made a nice clean break above a prior swing high resistance right over the weekend. This clean break happened on Sunday, breaking above a swing high resistance at 2,693. So once again, what was a swing high resistance can now potentially function as a pullback support, which seems to be occurring today as well. We can see the bottom of this wick coming quite close to the pivot, but since then it looks to have pulled up slightly. So we can probably expect a nice bullish bounce off the pivot as well, especially if this ascending trend line holds, right? We can see Ethereum has bounced off this ascending trend line several times since 13th of October, and we have the intersection of the ascending trend line as the pivot to identify a pretty strong support area. So if we do see Ethereum hold above this level here, we can have slightly higher confidence that this bullish uptrend is going to continue, and if that uptrend continues, we can then target this 50% Fibonacci retracement as the potential take profit target, right? You have two Fibonacci levels identifying a strong resistance barrier, as well as a pullback resistance at 2,871. The $2,871 is a nice pullback resistance level. We also have a Fibonacci extension at 127% and a Fibonacci retracement at 50%. So between $2,800 and $2,840 is a pretty strong resistance barrier, which is where you can identify a potential take profit target should we see Ethereum bounce off the pivot, right? So any nice bullish bounce of the pivot, right? If that were to take place, we can identify a suitable take profit target that's identified by a Fibonacci confluence, which is the 50% retracement and the 127% extension, right? So the key levels here for Ethereum. All right, okay. Let's see if there's any last request, right? Is there any last request? Otherwise, we'll just do a quick recap of what we've covered, and then we'll call it a day. All right, okay. So let's just wrap things up. Right, dollar index. Demand for the dollar index continues to remain strong, right? After pulling back quite sharply last Friday, the dollar index stabilized at around 103.46 this morning and has continued to climb higher. It has remained above the pivot level at 103.27. The pivot level is identified as a pullback support level. Previously, this was resistance in early August, right? And I've identified 103.92 as an upside confirmation level, right? So this is also a resistance barrier that's accompanied by Fibonacci retracement at 61.8%. So with dollar index rising strongly today, if you've gone long at the open for dollar index, right, you can identify your first take profit target at this upside confirmation level, which is at 103.92. And of course, if dollar index continues to climb higher, right, a break above the upside confirmation could probably push it or lift it all the way towards the first resistance at 104.68, which is an overlap resistance that's accompanied by a Fibonacci retracement at 78.6%. Right, so take note, the upside confirmation and first resistance levels can also be used as potential price targets for long dollar index positions, right? And in terms of support beyond the pivot, right, there's a nice overlap support at 102.55. That's also accompanied by Fibonacci retracement at 38.2%. All right, hi Bob. Okay, well, we can take a look at the VIX, but yeah, I mean, I think it makes more sense to look at the VIX versus the US 500, right? Because we all know the VIX is uh, derived from the options market of the S&P 500, right? So it makes more sense to look at them together, right? You can see, yes, VIX is somewhat elevated, but yeah, normally, right, when you're looking at VIX, you're looking for it to hit high levels, right? And as the VIX retreats, right, basically it does help us identify a potential bullish reversal for the index as well. And you can see here, right, when VIX accelerates sharply, of course, markets are pulling back strongly as well. But then as the VIX starts to recede, right, and starts to pull back as well, starts to start falling, we can see markets stabilize, equity markets stabilize and resume higher, right? You can see this obviously very clearly here on 5th of August, right? It's a very strong spike in the VIX, climbing, going as high as 38, 39. And also here, VIX spiking slightly as well on Friday, 6th of September, rising above 22. This is where US 500 pulled back sharply again and then reversed. And then once more here on 7th of October. So you can see here, this level at around 22, 23 in recent weeks has been a level where the VIX has increased to, indicating high volatility in or relatively high volatility in US equity markets, right, on an options market. But we've not seen a large spike as the one in 5th August so far, right? This one here that occurred on 5th of August is pretty high. That's at 39. Right, hi Bob. Oh yeah, for sure. Uh, you can trade the VIX itself, of course. You can trade the VIX itself. A lot of people call it selling volatility strategy. Yes, you can do capitalize on that as well. So you can see here in mid-April, the VIX rose as high as 15 and rose high as 20 on 15 and 22nd of April. And this is where also US equity market stabilized right as the VIX receded, started to pull back. US equity market stabilized before bouncing, reversing to climb higher. So take note, right, as the VIX spikes, and then you can see it start to pull back quite strongly. It also gives us an indication of a potential near-term bottom for US equity markets, right? You can see here spikes in the VIX usually correspond to a near-term bottom for the US 500, and we've seen that play out quite nicely on 7th of October, 6th of September, 5th of August, and also on 19th of April as well. All right, so that's all I've got for today, right? Right. All right. Thanks, Ajay. Right. All right. Thank you so much. All right. Thanks, everyone, guys. Truly appreciate the comments. All right. Okay. So, yeah, let's wrap things up. So, just before we sign off, right, take note of the calendar this week, right? There's quite a few things going on. We've got the Bank of Canada with its monetary policy statement on Wednesday, 23rd of October. And then we've got flash PMI data for the Euro area and for the US and the UK as well on 24th of October, Thursday. Plus, we've got a few other things as well. So, take note of the other events going on the calendar uh, for this week. All right. Thanks, everyone. Take care. Have a great trading week, and I'll catch you all in the next session.